Hello everyone, it is Sunday night, the 22nd of March 2020, and after yet another very eventful weekend, I think it's really worthwhile discussing. I'm going to be looking at the US dollar index and the major currencies, and kind of highlighting the markets that I'll be stalking this week for trading opportunities. Now, it really is worthwhile noting that for those of you who aren't taking this virus seriously, you really do need to be doing that, and you need to be taking action now, because there will be a time when it'll be too late, and actually that's rising very quickly, or that's steadily approaching. So you need to be doing that, and you really need to be cautious. So I know there were people today out in Richmond Park, and it's just very foolish. So it's because we haven't seen anything in our lifetime like this, we don't really appreciate the risk, but it really is real. It's very much the case. You need to be doing that. So the next thing that I'm getting to is that there does appear to be almost no indication that Donald Trump knows what he's doing at all. And of course, he's got rid of all the really educated people around him, aside from Dr. Fauci, who's good. But aside from that, there's just no one in the White House who knows what they're doing. They're not qualified for this kind of stuff, and they're looking to obviously benefit off it financially. And that's not conspiracy talk. That is fact, and it's revealing itself publicly every day. So the thing is, though, is that the governors of the individual states, and like the mayors and whatnot, are all taking action themselves. And what you're really seeing at the moment, and it's important, it's relevant, is you're seeing a kind of a civil unrest in the US, and it's very interesting. It's almost certainly going to lead to Trump being voted out in November. So all of this is relevant because this is going to impact the markets. Right now, people are effectively starting to discount Trump. They're just not even paying attention to him anymore, but they are seeing the mature and skilled and educated individuals coming to the foreground, and that will renew some confidence in the US. So basically, there will be some renewed confidence in the US, but it won't be, Trump's not going to benefit from it. He's going to try, but he won't. And so the point of this is that, yes, eventually the markets will come back to normal. This, as I said in my last week's analysis, I don't really expect it to be in 2020. I think this is likely to be the case for several months. We might have calmer patches, but we are, generally speaking, the markets don't really change their mood that quickly. So you can see, and starting off looking at the charts, I've rambled a bit. Let me just get off with this. This is an extremely unusual bullish candle on the monthly for the US dollar index and the weekly. So the question is it overextended? And the answer is absolutely, it is overextended. It is due for a retracement. It's powered through 100. And so the implication being, and I need to include a bit more time in here, so I'm just going to go back and include a couple of years. So let's say 5 years, for example. I need to see when we were last here. There we go. So these there are some other levels coming in. Where we are now, 103 is actually a level we've had in the past. Once we break through that, then we'll head up towards sort of 107. So let's see if this level is going to hold. In the meantime, my expectation really is going to be that it's due for a retracement. It's overextended. I think the probabilities of getting a retracement this week do somewhat exist. We'll see. Please understand that we are living in unusual times now, and the markets therefore are capable of doing things that we haven't seen them do in 10-20 years. So we need to understand that conditions are just unusual. So it's overdue for a retracement. My expectation would be ideally for it to come back down and test this 98 level or the 100 level, which puts us into this area over here, and really that would be ideal for long opportunities. Now, depending on how it reacts against the 103 level, if it ends up, now this is where it gets interesting. So we've got non-farm payroll, which is going to be in the first Friday, very shortly, in about less than 2 weeks from now, and it's very likely that can't even begin to imagine how dire things are going to be. Airlines are tanking because, of course, no one's flying. I mean, we haven't even seen the impact on employment. And I think that there's a very high probability that that number that comes out, the president's going to do absolutely what he can to hide that number. But if we get a peek at the real number, it's going to be frightening. It's going to be terrifying. And so I think that that's going to have a massive reaction on the US dollar. So I would be incredibly cautious, ladies and gentlemen, about trading around those things. You've been warned. You should stay away from it. I would stay away from it. The markets are going to possibly swing wildly. And what that could result in, you know, the dollar is right now a safe haven currency, absolutely, and that has to be the case. But we could just see a wild swing. If this ends up being a very strong rejection candle, which doesn't make sense because it's going to happen in April, I think we're likely to see this continue to strengthen. So for now, my expectation is a stronger US dollar. And based off this monthly candle, there's just no other way it can kind of technically unfold. But it is overdue, it is overextended, and a pullback and a continuation makes a lot of sense. Pullback to a nice round number, 100 great, and 99 or 98 and fib levels make the most sense. Looking at euro dollar, you can see same thing, a bearish candle there as well, coming down towards these lows. I would expect the market this week to do minor retracements back up into these levels, but looking for opportunities. And I took a nice trade on Friday, which was in my FOREXVOX group, and looking to see these levels head down towards 10500. Then having a look at sterling. Same thing again, pullbacks into this, looking for shorting opportunities, ladies and gentlemen. There is a beautiful level there towards 1.2. Really nice shorting opportunities that I'll be looking for there myself, expecting it to weaken. Aussie dollar, same thing again. There's not going to be much change, but I think it's overdue for a deeper retracement, so I'll be looking for that. Pullbacks towards 0.65 is actually too far, most likely towards the monthly 0.6, and it's slightly higher than that. Kiwi dollar is going to be the same, also overextended, a little bit overextended here on the monthly, certainly on the weekly, but pullbacks in towards 0.6 makes a lot of sense. Then having a look at dollar yen, very bullish candle here, but this is still range bound, and therefore my concern is that it doesn't really break outside this range, and therefore it's difficult to trade because it's not really trending as such. And same thing again here, dollar Swissy largely is still in a downtrend, even though we have the strong bullish candle of a historical level of support. It is still range bound largely with ceilings over there. So it's broken the weekly downtrend, but again, I'm just more cautious on dollar yen and dollar Swissy. Dollar CAD is ridiculously overextended on that weekly time frame. The monthly, look at that candle coming up towards 1.46. Strong rejection the last time it did that in January 2016. And again, the possibility of that happening here is also very real, but overdue for pullbacks. And so, in other words, although the dollar is driving its own thing, I'm just going to be looking predominantly at those opportunities on Euro, GBP, Aussie, and Kiwi, and more cautious on dollar CAD, and then probably ignoring dollar yen and dollar Swissy altogether. But all of them do appear to be supporting a stronger US dollar at this time. And so for this week, that is really what I'm expecting, and incredibly cautious around the medium and high impact news.